Gold prices are up on Wednesday as central banks take coordinated action to provide money to banks. All right, Tim, so we have 5 central banks will now make dollars kind of available at cheaper prices for a longer period of time. What is the effect of that on gold?
The effect on gold, it's a form of quantitative easing, so it should be good. It should actually be good for gold.
How inflationary is that for the US dollar and for how long?
Potentially it could be inflationary. Again, is this going to be extended? Is it going to be until 2013 or is it going to be extended further? Because what we've learned in the last few years from the government here, from the governments in Europe and elsewhere in the world, is that what they say today is not necessarily what's going to be happening in 2 years' time.
So then we see the dollar index coming off a bit on this news, but it's still near 52-week highs. So is gold reacting because we're seeing investors scared of inflation, they're going to gold, or is it still acting as an inverse to the dollar at this point?
I think we're going back to gold being your investment of last resort. I think people are quite spooked and scared out there. So I think we've actually seen at ETF Securities, we've seen inflows in the last 2 days into our European products and also here in the States as well.
I just want to hit on the news that the People's Bank of China lowered reserve requirements for banks by half a percentage point. What does that mean for gold long term in China?
Look, China's interesting because it's, what you've just spoken about is obviously is one of the top stories today, but something which has also happened in China very, very recently in the last few days is I think it's the Ministry of Finance has actually announced tightening rules for how gold producers, of how you actually produce gold in China. And they're basically looking at closing down a lot of the small smelters and things like that. Why? Because of the environmental impact. Because if you have somebody with a small smelter, they're leaching lead and toxic metals into the ground, but also into the water supply. So the Chinese are now taking action against this. So China, obviously the #1 gold market in the world, what's happening? They're actually tightening up their own internal supplies. So this actually could help gold medium to long term.
In terms of today's rally then, how much of this do you think is actually momentum driven, kind of traders jumping in, not wanting to miss it, and how much of it is actually supportive buying at this point?
I think the fact that we're seeing inflows in Europe and in the US, I think a lot of it is actually supportive. Because if it's going to be traders, they're going to be using the COMEX futures and things like that. With the ETF flows, people coming into ETFs like ours, then it is much more supportive, I think.
All right, thanks, Tim. I really appreciate it. So lots of factors moving gold today. We have another form of quantitative easing. We have China lowering reserve requirements and also tightening their own gold supply. So gold finding some support.